All right. So today in this webinar, we are going to some quick back testing for you. And after that, I will start quick question answer session as we have done in a past webinar. So which pair you should do back testing? Everyone, let's say make voting in a chat section. Everyone. And every day, I mean, every week's a different pair must be, so which will be more helpful for everyone. Okay, gold, GBP, Aussie, NES 100, Bank Nifty, Euro USD, German 30. Okay, Bank Nifty, gold, GBP, gold, Aussie USD, Euro USD. Okay, there are a lot of pair. Actually, everyone have a different scenario. Okay, so what happened today in this webinar? If we cover our Indian market like Nifty, Bank Nifty, any other stock like Mr. Stock, because we have not done any Indian market indices still, right? In any back testing, because we have covered Euro USD, GBP USD, gold, Bitcoin, everything. So today, uh, let's say clear Bank Nifty. Okay, it's not about market, like everything same process in every market, right? So because a lot of so how many members are agree with the Bank Nifty analysis and Bank Nifty like back testing? No, yes, yes, no. Okay, majority of the members saying no, because the majority of the members are trading in a forex market. Okay, let's choose the another one. BTC USDT. Okay, NS 100, NS 100, BTC. Okay, let's see Bitcoin in a crypto market. Okay, because there are different like everyone have a different request. So let's see Bitcoin crypto market, and you can do, as you know, in every market have similar story. You have to follow similar principle, similar rule. Okay, but after finish the back testing, I will start a quick question answer and some market analysis on your demand, right? So no need to worry anything. Okay, let's start Euro Bitcoin, BTC USDT. So first of all, starting from the higher time frame perspective, and let's see what happening here. And this was a previous analysis. Okay, right. Which part you wanna back test, everyone? You can annotate here now. Which part you wanna back test today? This is a ranging market, and this one is also ranging. Here at impulsive move and ranging, again impulsive, range, impulse, same process. Okay, let's see. All right. So we are going to backtest in a 15-minute and 1 minute time frame in a Bitcoin, right? And you can apply in every time frame, like if you base to trade in a 4 hour time frame. So simply you can also 4 hour time frame, right? It's not about time frame. It's all about the process, and process are similar, right? So you can backtest in a higher time frame like 4 hour, daily, weekly, monthly, even 15 minute, 1 hour. Every time frame is similar, same thing, right? But today in this webinar, we are going to analysis in a 15-minute and 1 minute time frame. All right. So let's see, and starting from this one. And if you can see in a 15-minute structure, everything is a looks a bullish, right? But at this point, what happened here? You have to check here. The last buying momentum for this top, this one. Okay, so this is the last highest move is here. So what happened here, and what we can expect here in this case? Before this move expectation, you have to mark the previous structure and what happening here and what we can expect here in this case. First of all, this is our bullish structure, all right? And this is our bullish structure, and everything looks a continuation. And this is our actual previous high, and I'm talking about the 50-minute structure. The previous high was here and higher low is here, right? And then what happened here? Market take this high. When market break this high, and this become our peak of structure, right? And this move is a called peak of structure. Again, continue pushing higher high, and finally market create new high at this point, right? And then why this one? Because market taken out the inducement. Oh, I'm sorry, what happened? Okay, so this is a pullback, and you can see this is the inducement, taken out the inducement, confirm the higher high, push downside. But problem is here, in the next attempt, market not close of it, just sweep the high. When market sweep the major high or low, we are looking for the sell, and sell when market taken out the previous high. And when market taken out the previous high, simply you are looking for the anti sell setup. Okay, so previous high sweep here, and we are looking here for sell on this candlestick, right? Sell here, and this is our target. This one, first inducement, this one. Post downside, we have to wait for it. If market close above it in the next attempt, this become our peak of structure, right? Because market momentum is a bullish, and this is a sweep here. Okay, so generally this high transfer here to here, something like this. In the next attempt, what happened here? Market finally close of it here, and this become our valid break of structure is here, right? And this become our break of structure again. And after this, what happened here? Where is our higher low in this case? You have to check here. Where is our lowest point in this case? Higher high and higher low. Where is higher low? This one. Because this is the lowest point is here. Market continue going higher high, and again market push downside and break this low. And when market break this low, this become our change of factor. Okay. In this case, as you can see here, how many are in this case, after this change of factor, where is our, first of all, you have to check inducement, right? So where is inducement in this case? Look at this picture and remember one more thing is here. If market, okay, sweep the liquidity, right? In that case, you don't need to follow the inducement. You have to wait for to mitigate your order block PUI. Simply, you can take entry here for buy and sell, right? But when market not sweep the liquidity, right, and simply follow the structure and push downside, then you have to wait for taking out the inducement before drop, right? So right now, what happening here, CHoCH, and where is inducement? In this case, you can see if market create inducement, which is fine. If not, just also fine. Correct. Why? Because this move is already taken out the liquidity. Okay, this one. In this case, you can see here, there is no order block, there is nothing here, but market respect this one, this zone. Why market respect this zone? Let me show you exactly. You can see this is an impulsive move after this CHoCH, and there is a no inducement. So if market not create inducement, if there is no order block and nothing here, in that case, we use this type of unmitigated shadow, right? Mark the previous low, previous high is here, and the current candle high is here. So gap between this one, this is called a PY. Why? Because this candle taken out the liquidity, this high, right? That's why this shadow is more a high probability zone for the sell, right? And same principle, same thing will be applicable in a bullish market. Tap here gives direction and push downside. So what happened here? Look at this one. First CHoCH here, because this is a major CHoCH and this is a structured CHoCH. This is internal and this one is external. So internal is also shift here. Market was bullish and turn into bearish in a lower time frame also. Okay, let's change the color. And after this CHoCH, what happening here? You can see here, after this CHoCH, you have to sell. Where is inducement? Inducement is here. Because you have to understand the previous data before the current price action, right? To identifying where is market going on in the next move, you have to mark the previous data, what happened just before it, right? So CHoCH, taking out the inducement, and after taking out the inducement, you are looking for the sell. So you have to mark where is our unmitigated order block in this case. Look at this picture is here. Everything is a mitigate here. In this case, you can see here, there is no unmitigated order block or anything. Everything is mitigate here. So when you are looking here for buy and sell, and what are you looking here at the current price action? So everyone annotate here. When you are looking here for buy and sell based on the 15-minute time frame. SCOT. What is this SCOT? SCOB, single candle order block. Okay. Yeah. Perfect. After this inducement, you have to mark where is our unmitigated order block, right? Unmitigated shadow order block or anything, right? So in this price action, you can see how many order block you have. First of all, you have to check, right? So in this case, where is order block? This one? Oh, I'm sorry. And this one is our unmitigated shadow is here. First one. And where is our, yes, sir. This is an entire candlestick, right? Yes, sir. And the next PY is here. These two PY is here after taking out the inducement, right? Yes, sir. This is a inside bar, correct? Because the previous candle high and low both are protected here, right? So you have to mark the inside candle, but this one is already mitigated here. So in this case, how you can deal in this situation? Simply, exactly, this is invalid, correct? But main thing, how you can deal, right? What happen here if market not create like mitigate this one, right? Left. No, sir, this is not correct. Actually, the main thing, taking out the inducement, and after taking out the inducement, how you can play? You can play in a 2-3 scenario. First scenario, after taking out the inducement, sweep the high. You can play here in a lower time frame. First possible scenario. Next possible scenario is here. You have to mark the order block. This one, right? So if market mitigate this one, either sweep this one and create any single candle order block like CHoCH or anything is here, then you can take entry, correct? So what happen here? Market not mitigate your order block, right? But market taken out the inducement. After taking out the inducement, market create this one as a single candle order block is here, simply, right? You can sell here in a lower time frame, right? And here, very highly chances your stop loss hit here at this point. Why? Because the previous candle high taken out and you are willing to sell here based on a 1 minute time frame, right? Then how you can deal in a next step? And where is our next step? Next step is here. Simply, you have to check here. Let me show you what happened here. Okay. This one is our previous demand is here. And when demand convert to supply, right, that's called flip, right? So this demand create a supply is here. So we are willing to sell here. When we are willing to sell here, this one has an inducement, okay? And after taking out the inducement, where is our supply zone? I'm sorry, happening. So this is a demand push downside and break on this low. So where is a POI? I mean, next supply zone. Okay, great. This is our last buying candle before the stop. So simply you can sell here. And this is a valid or not, everyone? This is a decisional. Why? Because you have a one more py is here, because price is not mitigated or extreme. Exactly 50% probability. Here you can play here, okay, but this one is a 50% probability is here for the sell, right? Because market ignored the inducement, that's why we are looking here for take the risk here, right? And then you can switch here in a 1 minute, and you have to refine here in a 1 minute order block to check, and then wait for mitigation and switch in a lower time frame, and then you can play here for this sell, right? Okay, so you have to switch here in a 1 minute time frame to see exactly where is our 1 minute order block is here. So everyone mark here where is our 1 minute order block and shadow, and you have to mark high probability order block or shadow. Okay, perfect. Order flow or candle very small. There are a lot of order blockers here actually. Look, the uh, as I mentioned in a part 16 and 17, when you have multiple order block, right? When you see multiple order block, then you have to wait for a reaction, right? And extreme always high probability, and before below the extreme, like 50% of probability, right? Because you have no idea that where is market going on. Okay, so you can simply play on extreme, right? Extreme is always high probability. So when market tap on your extreme, then you can take risk. Okay, when market tap on your decisional, you have to wait for additional confirmation like single candle order block, check, choke, and flip, that type of confirmation. Let's delete this one. Look, the extreme one is here, first one, and the next one is here, and the next one is here. Right. So three order blocks in this case. Okay. So these three order block is here. But why market respect on your extreme? And you can see on every order block market gives a reaction. But why market measure move to push down on extreme? Because extreme always high probability, and below the extreme is decisional order block is a 50% of probability to market push upside and downside as per your plan. Okay, so simply you can buy and sell on extreme, but if market tap on your like a decisional py, decisional order block, then you can play after additional confirmation, right? So first okay, the first order block was mitigated here. You can see here, you can take entry here because market chalk here, but problem is here there is no inducement are taken out in a lower time frame, right? That's why we need inducement here before the sell. If market tap on extreme and create chalk, and then you can sell here, right, based on single candle auto block and sweep entry module also, right? Yes, sir. This is also possible here based on a previous candle high sweep and sell. But problem is here, there is a no inducement and price tap on your decisional, not extreme. If price tap here and gives like this reaction, then you can sell here, definitely. Yes, sir. This high is also sweep here and sell here. But where is the stop loss? Above it. And the next PY is here. The next PY is also here. Okay. So this is a little bit risky here for the sell, right? So in this case, you can take chalk confirmation, which will be more better for chalk, right? But market not create any chalk here. Okay, let's see. This one, chalk, inducement, and sell. Yes, sir, you can sell here. Put the stop loss just above it. Okay. And where is target? Target is here, right? Perfect. Not SMT, sir. This is a higher time frame order block is here, right? So that's why this is not SMT. SMT means when you are buying or selling without inducement, without liquidity, that's called SMT, right? In this case, market taken out the liquidity, chalk, and taken out the inducement that we are selling here. Let's see. Okay, this is a stop loss hit. So where is the next PY and where is the next entry here? Everyone, you should wait for another confirmation or you should take entry here. What are you looking here? Confirmation, please check tag external. So this is an external. Okay, there are different. This one is unmitigated shadow. No, sir. We can't use this shadow as a PY, which you mark. Actually, this type of PY we mark when we have a nothing, or any order block in this case. I understand what are you trying to say here. You are saying this PY, right? Because we have marked in a 50-minute the same PY, but why not mark in a lower time frame? Because in this case, you can see multiple PY like 1, 2, and 3 PY. Then why need to mark this one, right? If there is a no PY is here, then you can mark this one. Okay. And this one is a previous candle high sweep here. So this is an extreme market tap here. And when market tap on extreme, and then you can simply also sell here based on single candle auto block, single candle sweep, and chalk, flip, everything. And directly also you can sell here. So what happened here exactly? The previous high sweep here, push downside, candle close below it. So you can sell first entry here. Uh, this one. And stop loss, just avoid. And target, the previous measure low is here. Okay. Yes, a single candle mitigation. Sir, why SL not above higher time frame OP? Sir, I put the stop loss here. You can also put the stop loss just above it, but the stop loss range are too much higher. That's why I use this one. Okay. But if you wish to more secure, then you can also use this. Both are valid. Okay. The previous swing high sweep here. Sweep, and then this is our single candle auto block is here. Next candle open and sell here. Put the stop loss just above it. This is the first entry is here. Okay. And this is based on the sweep. Okay. And let's see what happened next here. Okay. Perfect. Okay. Okay. Perfect. So what are you looking here for, everyone? Okay. Okay. Perfect. Sir, buying opportunity are not able to catch in this scenario because a higher time frame tap on your supply zone. So why you need to buy here, right? Buy only possible when market internally sweep the low or high. In that case, you can short term buy or sell, right? So simply what happening here in this case, you can see here the market are trying to push higher and actually demand, I mean the gives reaction push downside, and this is a order block but failed. But as per our theory, this is a not a valid pullback. Otherwise, this is a valid setup for the sell. Correct. Why? Exactly. This demand convert into supply, and if market create here a valid inducement, then we can sell our it here. But problem is here market not create inducement, and next thing is here The next pullback is not sweep this high. If sweep this high, so we can also here sell here. Okay. What happening? Sweep entry. I don't know what are you saying. If previous structure sweep here, then you can sell here, right? But market not sweep as per the 1 minute time frame, so we can't sell here. But let's see what happen next after this one, and what are next possible scenario in this case. All right. Okay. So now, where is our next PY, and when you are looking for the sell, everyone? Okay. Please mark one by one. Look. So before the buy and sell, price must be taken out the inducement, or market must be taken out the liquidity, right? So in this case, where is our inducement? Inducement means first pullback, right? So where is our first pullback? First pullback is here, this one, correct? Exactly. So this is a first pullback. So we can sell our bit. So where is our like a actual uh, order block when you are looking for the sell, correct? Look at this one, right? So simply you can sell here, right? But the next, just below it, this one is also inside. Here. Let's delete this thing. 1, 2, 3, and 3 order flow is here. 1, 2, 3. So the first, the extreme unmitigated order flow is here, which is already sorry, this is an unmitigated refinement, but actual order flow is here, which is mitigated by this one, correct? And the next one is here, the last buying momentum before the stop is here, this one. And the third one is here, the last buying momentum before the stop, which is already mitigated here. So in this case, you can also refine your order block, whereas our unmitigated, right? So in this case, only this one is our unmitigated refinement. So very highly chances, if market create a tap on your unmitigated refinement order block, then market gives you momentum to the downside. So very highly chances, right? So if like you have to mark the first order block, where is our order block? This one. No, this one. Because this is our last buying candle before the stop, not this one. So this is our actual last buying candle before this drop. So this is the order block is here, right? So you don't need to sell directly is here. Even everything is mitigate here, and you have a confirmation is there, but you have to wait for a single candle order block sweep before the enter. Exactly, right? So let's see and wait for it. Okay. So still, where is your next possible scenario here? This one or this one? You have a 2 PUI. No, sir. This exactly. This one is a 50-50% probability. Why? Because the just above it, the unmitigated order block is here. If everything is mitigated here, above it, and market sweep this high, so we can take here for this sell, right? And this high act like a inducement because as per the structure, this is an inducement still, right? Like this, and this is a single leg move. This high act like an inducement, continue go higher and then sell. Correct. And if price type here and gives a single candle mitigation sweep entry, then definitely you can enter here for sell, and price must be taken out this high. Right. Single candle mitigation only use when price tap on PUI on a specific point, then you can use. Otherwise, you can't use anywhere. Right. So price already broken this low, so you can't use this single candle order block here. Okay, let's wait for it. Okay. Tap on your extreme PUI. This one. Put the stop loss just of it. And where is target? This low. First measure low is here as a target, and you can set the maximum target is the main low. Which one is here? Correct, exactly this one here, and this one is also, these are targets. Okay, and market giving a reaction here, but there is a no other single candle and sweep entry is still here, so you have to wait for it. Okay. 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 So in this case, you don't need to wait for chalk and press tap on your extreme, like press tap on your unmitigated order block is here, right? But if you base to sell based on a chalk, then chalk we need when press tap on 15-minute PUI and 15-minute measure higher low C. That case you need a chalk, right? Based on the order block, based on the higher time frame order block sweep or anything, then you have to sell only order block directly based on single candle and sweep entry module, right? So in right now there is no opportunity here. Okay, and let's see what happening here. Continue pushing downside and broken this low. Let's switch here in a 15-minute time frame to check again what happening. Then you can understand more better and clearly that what happening here. Okay. And now you have to wait for it to create new price action is here. Okay. Tap on demand zone, gives reaction and sweep the previous high. And if market came back here in the zone, exactly this become our demand to supply, then definitely you can sell here. Correct. So let's see. Okay, mitigate here. So what we should do in this case? Single candle order block. Okay. The next thing, 1 minute order block. No IDM. Yes, sir. We no need IDM because the previous high sweep here. Sorry. Refine into 1 minute exactly, and you can play here in a two tabs. First thing is here, the refine here in a 1 minute time frame, and the second thing, the previous candle high taken out, and this candle act like a PY, right? So you can also sell here based on the 1 minute refinement, right? So where you should use refinement on the first one and the candlestick. Candlestick. Okay. Flow, order flow. Perfect. Let's see. First of all, you have to mark your unmitigated order block is here. In this case, this one, exactly. And the next one is XT. So these two PUI order block is here in a 1 minute time frame. If market tap here, and then definitely you can enter here for sell. And the next possible scenario is here. If you switch here in a 1 minute time frame, sorry, 15-minute time frame again, then you can see here the previous candle high sweep here, right? Sweep here, this candle act like a PY. Why? Because price tap already on your higher time frame order block. So price no need to mitigate your this order block or this order block. Why? Because price taken out the liquidity tap on your higher time frame PY, and you have to focus here, not there, right? So you have to again switch here in a 1 minute time frame, right? Then you can add more position here for this sell. Correct. So let's see. So where is our order block in this case? And when you are looking here for sell, okay, okay, the previous candle high sweep here, and you have to find your order block, right? So where is order block in this case? You can see this one, only this one, correct? So you can sell here, correct? But where is stop loss? Just above it. Perfect. Exactly. Correct. So this one is a stop loss just above it, and SMT. No, sir, this is a not SMT. Why? Because the 15-minute candlestick sweep this one, right? And we are putting the stop loss just of it, right? And let's see. And the target are similar. The previous first recent low as a first target and main target. The first target is here, right? Almost 4.45 hour, and main target is here. Okay. And also I want to mention one more thing is here, price creating some reaction here. So maybe possible here, create some flip anti-module also here. Okay. Gibbs reaction and failed, right? So this is a like demand to supply, and this one is our SMT, right? Demand convert to supply, and you have to sell just of it. And in this case, you can take one more additional confirmation, like price type here, Gibbs reaction, and then sell. This is an additional, right? But if you are willing to sell here like directly, then you can also, but put the stop loss just of it, right? So let's see what happened next here after this one. Okay. There is no reaction here, right? Okay. Here you can add position here. Put the stop loss just over it. Okay. Let's see. Previous candle high sweep here. Sell or not? Everyone. Take it. Yes. Yes. Yes, sir. Because the previous high sweep here, right? When previous sweep the previous high, then you can take entry here for the sell based on the candle order block, right? If candle close of it, then you have to wait for it to create inducement or create here single candle order block, right? But price already sweep the previous high, then you don't need to wait for inducement or single candle order block. Okay. The next possible entry here. Put the stop loss just of it. Okay. So now let's see what happening here. And remember one more thing, you have to check here why we are taking this trade, because the previous candle high sweep here in a 15-minute time frame, in a higher time frame. That's why we are taking risk here. Otherwise, you don't need to take entry here randomly, right? You don't need to sell or buy here, right? Because we have a specific reason for the sell, because the previous candle high sweep here and price tap on your higher time frame PY. That's why we are selling here in a 1 minute in a refinement, right? If there is a no sweep here, candle close over it, then you don't need to sell here, right? You have to sell here on a first PY is here and next PY is here. Simple. Okay, let's see. Okay, mitigation. Okay, all right. So any possible entry was here. Look at this one. Demand convert to supply and sell above it. Right. This was actually based on the flip demand convert to supply D2S. Exactly. This was another setup was here for sell based on it, like demand. I'm sorry. This demand convert to supply, and this is a inducement because price gives reaction here. Unmetered order block, tap here and fall. Right. But you don't need to catch all moves here, right? Because you have to catch. It is a risky here is a hobby. Yes, sir. Let's go here as we have. No, sir. This is a not risky. This is a 50-50% of probability, right? Why? Because it this one previous candle high sweep here. That's why we are taking this one. Okay. If market sweep the previous candle high or low, then we can take and price tap on your PY. Okay. If price not tap on PY, not taken out the like a previous candle high or low, then you have to wait for it to mitigate this one. It's all about probability. Where is high probability? You have to check. Okay. Let's see what happened next after this one. And now again, you have to switch here in a 15-minute time frame. And what happening here? Okay, let's see. Okay, so in this case, what happened here? Again, the previous candle low, I'm sorry, high sweep here. This one, this candle act like a PY is here, right? In this case, this candle you have to refine in a 1-minute time frame again, and you have to mark where is our unmitigated order block in this case. This one is our order flow is here, and this is order block is here. You have to wait for it to mitigation, right? So let's see what happened next here. Tap on your extreme. I'm sorry. Put the stop loss just over it and target same. Blow it. Okay. Check again in a 15-minute time frame. And this is a stop loss, right? Right. But this was a valid entry here for sell. Okay. Until broken this low, you can add position. I think this was broken. That's why this is a reason here for sell. Okay, but it's okay. Market keep reaction here and keeps a momentum to the downside and then fail. Let me show you exactly in a 1 minute time frame. This was happen here exactly. Okay. Again, switch here in a 15-minute time frame. And same process, same principle will be applicable here till this low. Okay, so now I'm going to start quick question answer, and after this I will finish the session. Right. Can you help the mark the current structure? Sure, sure. And this is our current price action is here based on the 15-minute time frame. So everyone help them to mark the structure, and what is the next possible move is here. Everyone mark the structure first. What is the difference between single candle order block and sweep? Both are similar, but single candle order block is generally used. In that case, press the previous candle high or low, sweep or not, doesn't matter. But the next candle must be close the previous candle low. Means the top of the candlestick must be close the previous candle low, and we can sell based on the single candle order block. And sweep means price must be taken out the previous candle high or low, like sweep the high or low. Okay. This is our higher high pushing downside, right? And after taking out the inducement, mitigate this shadow, going higher, failed. Previous high sweep here, push downside, single candle order block. Again, and an equity sweep, sweep, mitigation till this low. Break and push downside. Like this. Okay, so I hope you understand.